Welcome back to session 2 of our 12th annual Marine Money London Virtual Ship Finance Forum. As I said earlier on today, we'd much rather be meeting in London in person. That's not possible in the current circumstances, so we're very happy to be all together here on this online and able to discuss major issues in shipping. We have a lot of people, hundreds of people listening to us from all around the world. Welcome to you all. Now, shipping is not particularly predictable. 2020 was a wonderful example of that. 2020, I think, pretty much nothing in shipping was predictable in 2020. But nonetheless, what we're going to discuss in this particular session is views and opinions on 2021 main macro issues, and to see whether we can get any degree of predictability of what the main macro issues are going to be. Just before we start the discussion, a couple of housekeeping issues. You, audience, can ask questions. In order to do that, if you bring down the info bar on the right-hand side using the red and white arrow, you can then write a question down there where it's shown on the screen now. I will receive those questions. At the end of the discussion, I will ask a couple of those questions on behalf of the audience. And secondly, I'd like to point out again on the right-hand side of the screen, that section which says handouts. In that section, there are various PDF files from Marine Money and from some of our speakers and sponsors with company information, and there's a lot of useful stuff in there. So at your convenience, please just open those up and have a look. With that, I'd like to hand over to Paul Tivnan, Chief Financial Officer of Ardmore Shipping, and Paul is going to moderate the panel. Paul, thank you very much, and over to you.
Terrific, thanks Kevin. Welcome everyone, and first off, let's thank all the team from Marine Money for keeping these events going and giving everyone the opportunity to stay connected. So we've got a great panel today with expertise across a broad range of sectors. We've got Bob Burke, the Chief Executive Officer of Ridgebury Tankers. We have Dahm, the Chief Executive Officer of Klaveness Combination Carriers. We have Adrian Economakis, the Chief Strategy Officer at VesselsValue, and Mr. Nils Kovdal, the Managing Director of the London office at NorthCape Capital. So we're going to, as Kevin pointed out, we're going to cover a broad range of topics today. We only have about an hour, so let's hope we can cover as much ground as possible. We'll do some reflections on 2020, the COVID retreat and economic rebound, geopolitical relations and impact on oil price, the increasing importance of ESG. I think we've all felt that this year and what this means for shipping, and then some reflections on future supply and how long the current new building lull will last. We do have some survey questions which will pop up on your screen during the presentation, and let us kick off then with some introductions. So myself, as Kevin mentioned, I'm the CFO of Ardmore Shipping Corporation. We own and operate a fleet of eco MR product and chemical tankers. We're listed on the New York Stock Exchange, and aside from owning and operating ships, efficiency and carbon reduction is part of Ardmore's DNA since our inception, and we've invested heavily in recent years in eco ships and innovative technologies to improve performance and reduce emissions. So now let me go around the house and ask each of our panelists to take a minute or two to introduce themselves and your company. It might start with Nils. You're the next on my list as my screen.
Sure, thanks for that, Paul. Well, good morning, good afternoon, and good evening to everyone that's listening in or watching, and of course to my fellow panel members. Firstly, again, also for me to say thank you to Marine Money for putting this together. As Kevin said, obviously we would have rather been at the Dorchester in London, but this is a good second. My name is Nils Kovdal, and I'm with NorthCape, financial consultant slash advisor, focused on predominantly on the energy, transportation, and maritime sector. I joined NorthCape about a year ago, having spent the majority of the last 20+ years in the banking and legal industry related to ship financing. What we do is that we assist companies with raising capital for their assets, their projects, and operations. We've been successfully doing so since 2012, and we continue to leverage our strong relationships with financial institutions across the globe to tap different pockets of capital to suit our clients' needs. I guess in the maritime space, a lot of people associate us with sale and leaseback deals in Asia. But I can assure you we also have a much wider range of both capital and capital providers in the back of our pockets.
Great, thanks Nils. Engebret, you're next on my screen. I think we're...
Thank you, Paul, and thank you for the invitation to join this panel. Isn't the line is bad?
I think we're okay now.
So we in KCC, we are okay. So we in KCC are owning and operating a fleet of specialized and unique vessels, transporting both tanker and dry bulk cargoes. So our business is really focusing on improving the efficiency of seaborne transportation and thereby substantially cut emissions from transportation. So we are listed on Oslo Stock Exchange.
Great, thanks, Engebret. Bob, no stranger to panelists at Marine Money, so perhaps you can give a brief introduction.
Sure. Good morning, I'm Bob Burke. The first thing I want to mention is my picture down below. It looks like I'm a lot younger man than I am right now on the screen. I think a lot of us are guilty of that, but that's for a different day. I'm the CEO of Ridgebury Tankers. We're the owners of secondhand tonnage mostly. We have Suezmaxes and some MRs. We also invest in the VLC sector. I wouldn't say we're asset players by any means, but we're buyers and sellers of opportunity. We sold 14 ships last year, and we have 22 ships right now.
Thanks, Bob, and Adrian.
Great. Hi, everybody. So I'm Chief Strategy Officer at VesselsValue. That means today, amongst other things, I try to look at the future in terms of what we should be developing, new products and services for our clients. I've been with the company since we were a small little startup back about 10, 11 years ago. Done a lot of different things for them, but mostly working with developing new products and working with our clients, who tend to be financiers, investors, owners, traders, and governments. And what do? We provide a bunch of data, all sorts of different values, all sorts of different market information, vessel specifications, ownership. It's been a big growth area of us, 7 layers of ownership and already who owns and operates the vessels. Trade flow information, looking at the underlying demand, supply, trade flows and activities for the vessels, and some work in the compliance and monitoring space.
Fantastic. Okay, well, let's kick it off then with some reflections on 2020. I think it was a year that we entered into with a lot of momentum and expectation. The main topic, as I think about it, at the end of 19 into 2020 was scrubbers, the impact of IMO 2020, and things turned out very, very differently. So to get us going then, what's a few thoughts? What's front of mind for each of you as you head into 2021? What are your plans? And what are the threats and opportunities as you see them for the year ahead? So let me start with Adrian, maybe, to kind of give us an overview on the market. Lots of data, but just how did the market pan out in terms of what do the numbers tell us about 2020?
Sure. So thanks, Paul. So for those who know us, VesselsValue is obsessed with data and understanding data to really try to find the signals in the noise, cut through all the fake news, all the opinion, all the kind of stuff that we're hearing, the fear and so forth, to really understand what's going on. And that's become incredibly prevalent through the last year, particularly in our trade flow service, which has seen a huge spike up in demand, as I was saying, really amongst traders, owners, operators, and even we're doing a lot more government work these days for people to really understand how the world works. And I'll give you an example. We did a bunch of videos and reports through COVID looking at how demand had changed over time across the different sectors. And this is demand derived from analysis of individual vessel activity, loading, discharging, laden journeys, ballast journeys, and so forth. And we were able to see in most sectors the recovery happening a lot sooner than it was appearing in the news and in other places. So I think I'll just spend a couple minutes just looking at the data just to talk about what really happened over 2020. So I'm just going to refer to a few things here. So let's start with tankers. So I'm just talking over the year of 2020. So it's obviously a big sector, lots of different things there, but let's just say approximately values are down between 5 and 30%. 10-year-old Aframaxes were the worst affected in terms of values. They were down about 32%. And just out of reference, a 5-year-old VLCC over the years down about 25%. The best performing, Paul, you'd be like to hear, is an MRs, which were down at about -5% over the year. So still down a little bit, but in comparison to the rest of the sector, they were the top performer. In terms of looking forward, we work with a bunch of macroeconomic advisors, and they're expecting to see improvements in crude around 2022 and clean, they're expecting kind of similar to slightly improved levels, but somewhat flat over the next couple of years. In terms of trade, interesting here, crude demand, ton-mile demand across the whole crude sector, really, Afra, Suez, and VLs, down 3% on 2019. So not that bad, only down 3%, but there was a huge fluctuation, big drops in kind of summer of this year. Mid-East exports have been down massively, and then in terms of supply-demand balance, we've actually seen the negative growth in demand, slight positive growth in the fleet, and we've seen the fleet growth exceed demand growth by about 10%. With expected fleet growth at 5% next year, we need to see a good demand story, a good recovery story to see those ton miles improve and the market come back into balance. Clean tankers, really interesting there. We're only down -1% versus the previous year, which is amazing if you think of all the less driving and everything that's been going on. Autumn again was particularly low, but we have seen a spike up recently, and US exports are rising. They're not near pre-COVID levels, but they are up. The big news in clean, and Paul, you'll know this, is Southeast Asia. Cargo miles are up 15% versus 2019 in Southeast Asia, and this has really been driven in the last few months. We've got the RCEP coming into effect. Just demand, Asia just seems to be ahead and going very well. In terms of fleet growth versus demand, fleet growth is exceeded by about 5%. So we need to see a good demand story, but that could easily happen. Look what's happened in containers. Everybody's missed volumes, and then this demand has really come back with a big boom and has driven the container market, and we could easily see that as people start driving and really start consuming refined products again, we could see demand increasing, and we could see a very good market. Bulkers, I'll do these ones a lot quicker. Values down between 5 and 20%. Worst was a 10-year-old Cape. However, since the beginning of the year, there's been big up spike in demand for Cape size, big up spike in sentiment, and demand, let's say, for a 15-year-old Cape, just since the beginning of the year, is up 25%, right? Cargo miles, Capes, they are actually up 1% versus 2019, and that's just to the end of the year, and then we've had a big spike up recently. Demand and supply, very interesting across the whole bulker sector. Supply grew at 3% last year, demand grew at 3%. It's the classic knife edge. It could go either way, right? We could have a booming market, we could have a crashing market. Really depends what's going to go on in demand over the next year, and that's going to be driven by things like China, of course. Containers, amazing. Who thought we'd be talking about this? They've been, in the doldrums for years. Values up between 5 and 35%, with the maligned ship type Panamax doing the best at 35% up in the last year. It's fantastic. Demand and supply, demand's just well outstripped supply. However, going to call to a risk here, talk about threats, I'll refer to later. A lot of that is catching up volumes that were missed during the spring. We saw very little happen during the spring of 2020, and a lot of this is catch up. So unless we keep consuming all these goods, we could have a big fall of demand in containers, and that could drive the market down. And I'll just summarize the last two, LNG and LPG, very quickly. The data loves gas. Demand is increasing. We've seen the LNG market boom, but you're talking demand has exceeded supply by 10%. That is massive. We've got a big order book, but demand is up hugely. I had a good statistic here. In some, US exports are really driven up quite massively. And we're seeing the same thing in LPG. What's interesting in LPG is values actually haven't gone up that much, and rates have come down a bit recently, even though they're quite high. So we see quite a big opportunity in LPG values going up. So in a couple of minutes, that's our view on the data point of the cargo markets. Of course, I could talk about passengers and offshore and so forth on a different day.
Terrific. I guess, Bob, I mean, like us, you've got a lot of exposure to the tanker markets, and fantastic first half of the year. Second half, leveled off that a little bit. You've been around the space a long time. We'll talk about supply later and the new buildings and what that might mean more longer term, but does this feel kind of broadly familiar, maybe a little bit more concentrated, but when we talk about knife edge supply demand on it, how did this feel to you? I guess, first of all, how did 2020 feel for you and your reflections on it, and 2021, but how does the setup feel, the amount of volatility relative to kind of prior cycles?
Well, first, I'm listening to Adrian. I feel like the little kid in the room going, "What about me? What about me?" I mean, all the other sectors are taking off, and You know, crude is dragging.
Sorry,
Even
Paul.
even the MRs are ahead. I read Ben Nolan yesterday in Stifel, and he talked about the tanker sector, and he said how the MRs are doing relatively better than the crude sector. And then he said, unfortunately, banks do not accept relative payments. But having said that, yeah, 2020, we had, as everyone knows, a huge spike, and I think we were able to capture our fair share of that. We were able to sell a bunch of tonnage, which of course now we wish we had sold all of it, but that wasn't what was to be. You know, this time last year, I kept on saying on different panels, what are we going to talk about when scrubbers are behind us? And you know, once the calendar turned, we barely mentioned it because of everything that overtook us. But where are we now? I mean, it's as dismal as I've seen it that I can remember. You know, most of the tanker sectors are either at operating cost or, you know, or below. If you look at around trip voyages, they're all below. And of course, you know, we all did better than that. So, you know, we're bumping along. So we've given back most of the money as an industry, I think, that we wanted at the roulette table in 2020. And people started to see some strains on the balance sheets. But, you know, we wouldn't be in this industry if we weren't eternal optimists. And, you know, we look at the scrapping, which is, I always say, if we're looking at scrapping to bail us out, then we really have a problem. But, you know, I'm a firm believer that, you know, once the airplanes get back in the sky, I think we're down 3.5 million barrels a day in crude consumption, most of which is from, you know, jet fuel. So once that turns around, and from what I can read and what I can see, people just want to get out of the house. People just want to move. The projections for the airline industry aren't that great, but then most of that is the revenues driven by business travel. So as an industry moving oil, we don't care if it's business travel or tourism, as long as the oil is burned. So I think once it starts to turn around and the pipeline gets filled again, I think we're in for a good time. You know, we all know what the order book looks like. I think what I haven't read a lot about, but I can feel, is that the lack of capital investment in anything to do with carbon has really affected the ability for anyone to order ships. Private equity wants very little to do with the industry. The public markets really don't need to invest in energy. One of our big PE investors is in the energy business, and they pointed out that 10 years ago, energy or oil was 12.5% of the S&P. Now it's 2.5%. So the investors don't have to be in it, and they don't want to be in it. So I think the lack of capital investment in our industry is going to serve us well in the long term, and even the relative short term.
Terrific. And I think, look, like I was struck by Adrian's points, and I obviously don't want to dominate the panel on tankers, but it's near and dear to our hearts. But the recovery in Southeast Asia and Asia generally, associated with just, you know, post-COVID, you know, oil demand, as you think about kind of jet fuel demand, Bob, as you just mentioned, you know, that's already happening in parts of Asia, and coupled with some refinery shifts as well. So there are encouraging signs on the horizon. But switching now to maybe Engebret, if you want to kind of chime in here, you guys have much more of a kind of diversified portfolio of ships. How did you guys find 2020, and what's your kind of thoughts and observations as we head into 21?
I think we have had quite a good 2020. We have took advantage of the strong tanker market in the first 5 months, and then we have benefited from the stronger dry bulk market in the second half, and now especially now in the start of this year. And we are just in the final phase of our expansion program, where we have taken delivery of 11 new builds over the last years and have another 2 coming the next month. So we will have the full fleet on water in May, June. And again, our what we call the focus has been again to position the company to meet the expected stricter demands from customers for carbon efficient solutions. And so we think that will come, and we hope to benefit from that part. On the market, we are optimistic on the dry market. And I share the views that the tanker market should pick up coming into the second half. But of course, the big threat is, of course, that it will take longer time to ride out the storm on COVID-19 and this pandemic. This mutation doesn't look too good at the moment. But second half, I do hope will be good, and then we have the full fleet on water, which would be beneficial.
Terrific. And Nils, great to get your perspectives as well as a financier through all of this in terms of looking across the various sectors, the various different regions. What's kind of your observations on how 2020 evolved and how are the kind of finance community looking at 2021 and beyond?
Yeah. Well, I mean, obviously, 2020 was a quite a challenging year on the financing side. Then we saw a huge scale down or retraction by financial institutions from the industry, despite the fact that I mean, everything's regarded. I mean, shipping actually performed pretty well throughout the pandemic compared to many other industries. But of course, many of the banks and financial institutions that cover shipping also had huge aviation exposures, which for obvious reasons were impacted much more heavily than the shipping exposures. And coupling that with the fact that many banks had to go back to their home markets and focus on national rather than international business, and also had a general sort of reduced risk appetite based on what was happening in the world, it really started to get more difficult for many owners to get financing, and it's becoming more important than to gain access to new sources of capital.
Terrific. And as Adrian and I caught up yesterday, and we were reflecting as Adrian started talking about the vessel types down 5%, 10%. And we were talking about you also do some work in the aviation space. And if you were to run through the stats for aircraft, I think it would make us all feel pretty good about ourselves. But that's for another day, and more than likely at the bar at the Dorchester this time next year. But let's turn to the next topic. Actually, before I do, Andrew, do you mind pulling up the first survey, please? And we can keep moving ahead here, and when Andrew has the results in. So the survey here is: what will be the most important macro issue for shipping this year? Is it going to be COVID and the rebound, environmental pressure, oil price, continued global tensions, or more deglobalization and just more kind of regional centric activity? So while we're waiting on the results there, the next topic, guys, is the environment. And environmental concerns and the energy transition has become a really hot topic over the past 12 months or so. And across all sectors, we're seeing pressure from consumers, financiers, and the governments, and particular regions like Europe to really tackle greenhouse gas emissions in shipping. At Ardmore, we've been working on an energy transition plan for well over a year now. And we think there's actually a huge opportunity for us as a company, but also the industry generally in several areas, whether it's adapting existing technologies, new technologies, propulsion developments, future fuels, future cargo, capital requirements, as you mentioned, Bob, for the next couple of years is going to be really interesting. Who's got access to it? Where is it coming from? What's the cost associated with that? But let's start off with a few thoughts and questions for the panel. Well, before I do that, we've got the most important, I didn't see that very quickly, but miles and miles ahead, the most important for shipping will be 74%, and followed along with behind by environmental pressure. Okay, great. So getting back to the environment stuff here, a few questions. How are regulations in shipping likely to evolve, or will they be overtaken by events? I mean, do companies have time to really wait for the IMO, or will pressures come from elsewhere and take over? IMO is clearly the best we have, but do we run the risk of delays, and do we have regions doing their own thing, and as a result we've got a total mess and no joined up thinking? So maybe Engebret, if I can start with you on this one to get your thoughts and observations on this.
I think it's I think what we have seen in 2020 is just the start of this, and it's sad to see that the IMO is definitely lagging behind, restrained by compromises and the short-term measures that are supposed to be introduced in 2023. One of the measures, in fact, are counterproductive to the targets we are trying to achieve by promoting, in fact, inefficiency in shipping. So I think what's happening is that customers will take the lead, will drive decarbonization by being more stringent on which ships to charter in. And secondly, as you said, that there will be regions that will be in front, like which has lost patience with IMO, like Europe, that are introducing shipping into the emission trading scheme. And who knows what will happen in the US with the new Biden administration, whether that will happen. So I think, we as an industry we can't wait. I think we have to start working, which many also here on the panel has done, and just we invest in new solutions, improve efficiency, and I think that's the only way to go.
Great, and on that topic, Engebret, you're obviously like us as well. We've got an office here in Ireland. In terms of the EU and the addition of shipping to the ETS scheme, what's your thoughts and observations as to whether this is the start of a broader potential kind of really expensive carbon tax on our industry? And I guess will Europe lead the way?
I think firstly, the industry needs a carbon tax because the industry has to start paying for emissions. That's the only way to get incentives to improve. So I think in our mind, I think it's a good thing that EU has started up because IMO is far away from doing anything. And of course, we don't know yet how the EU ETS scheme will work out, whether it will only be for internal European business, or whether it will be for all ships going from and coming to the EU. So I think, as we've seen in other industries, when EU are starting up with regulations, many other regions are following, and then hopefully it could be an international solution that is equal for all regions, because it will become a bit more complicated if each region has different schemes. But I guess we have to prepare for that as well.
Great, bro. And we saw that obviously with the ballast water regulations, they were deferred. So it did create a lot of confusion, and as a consequence, it's taken a long time to get that implemented. Bob, you've been around this space for a while. We've been on panels together about kind of the environmental shift. I remember Marine Money November 19 at this point. But what are your thoughts on this? And you remember at the time you were reflecting on, what seemed like obvious regulations years ago never happened and dragged their feet. So how do you think about the state of regulations now, and how might this evolve? And how will the IMO kind of take the lead on this?
I agree that I think the IMO will be too slow because you end up with the lowest common denominator being agreed upon. It takes years. And I think the public pressure, is what's going to drive the formula. And I think it's headed towards a point of real uncertainty. There's a lot of pressure not to finance ships, oil companies. I read yesterday that Ecuador is being shut up by the European banks for exporting. I think they export 500,000 barrels a year. They're going to lose their financing. We see pipelines in the U.S. being shut down. So we see this all over the world. Banks are pulling out of shipping. And at the same time, there's a huge pressure for charterers to charter just new ships. Well, the two don't work together. And the both of them are driven by what the public thinks that they want. And I think the issue is that the public doesn't understand or doesn't think about what it takes, to change the industry, or how fundamental the industry is to the world economy. So I'm guessing we're going towards a point where there's a real lack of investment in the industry, at the same time a real pressure for brand new assets that are more and more efficient, and the two don't go together unless everything's 100% equity finance, which rarely happens. So I think we'll be under more and more pressure to systematically improve the assets that we have. And from our point of view, I think most of us on the screen are the same. We've really taken a look at what our assets consume as far as oil goes, and how to save oil, how to prove to our charterers and our investors that we're doing the best that we can. And in turn, we look at it and go, wow, we can save a ton a day doing this. It actually pays for itself, and that goes from expensive paints that cost $50 a liter, or what it costs for a bottle of Johnny Walker Black, to propeller boss caps. With everything that we all know can improve the efficiency, and actually measuring these things. And I think that's what will happen to our fleet over the next few years. But I agree. I think the IMO, any governmental organization that's made up by a host of governments, is going to take forever to come to any decision that the least common denominator can step up and agree to. Never mind the actual time that it takes to have meetings and conferences and and study groups and all the rest of this. And the world's moving really fast in this area.
That's great. And I kind of want to zone in on something there, because one of the questions we had is what more can shipping companies do? And would love to get Engebret's perspective on this as well, because everybody's chasing, the moonshot here and future propulsion technology, and we'd all kind of sit around and wait. But there's tons of stuff that we as shipping companies can do to really improve the performance and kind of get us on the right trajectory. So, I mean, Engebret, what's your sense about companies' adaptation of technologies and really embracing what we have today? Is everybody waiting for the silver bullet, or do you think there's so much more we as an industry can and should be doing?
I think there's still an untapped potential of improving operational and energy efficiency, and here we need a cooperation between owners and charterers, and that goes everything for regulating speed, optimizing speed, and of course all the initiatives that Bob was talking about. That investing in everything from anti-fouling to different energy-saving devices. So I think there are still a lot of things that can be done, and I think, but it needs the cooperation between charterers, and there I think this Sea Cargo Charter is really a great initiative, because the charterers have put up the ambition to reduce the emissions from the seaborne transportation, and they use this EEOI, which is the carbon intensity, and through that, if they cooperate with owners, you can get this moving to improve the efficiency of operation. So I think that's the starting point. But of course, eventually we have to invest in new zero-emission ships. But we come back to that later on in the discussion, I assume.
Yeah, I think that's absolutely right. And I think what is striking is how much more of these regulations are coming. It was, again, last year it was, or 2019, it was all IMO 2020, and that was upon us. But the targets are getting stricter and stricter, and going to be harder and harder to comply with. And it's EXI and EEOI, all of these things are. I think the pressures are going to contribute, and probably far in advance of where the IMO are going to get to. Nils, one for you. The Poseidon Principles was unveiled in summer 2019. It was a fantastic initiative and has really great traction. At Ardmore, we completed our first sustainability financing with ABN last year. Very proud of it. But what's your assessment of how impactful Poseidon Principles has been, and are you seeing banks changing lending policies, and how might this evolve over time? Do you think you'll have more banks, or will we get to a stage where all banks are signed up to some form of Poseidon Principles?
Yeah, I mean, to answer the last question first, I think yes. I mean, you'd hope all the banks will be signing up to this. I mean, I believe it's a very, very useful tool. It's provided, of course, that they stay within the regulatory frameworks that we have for the industry, and also provide some clear incentives for the owners to comply. That can be both positive and negative incentives, so a bit of a carrot and stick. Hopefully for Engebret and Robert, more carrots than stick, but still, there has to be something in it for them. But the report, I think you got Paul Taylor on later on today. I'm sure we'll talk about it. But the report was issued. It's a bit of a sort of trial and error at the moment, but it seems to be that the banks are getting a good hand on how to assess their portfolios, how it's going to be looking going forward, et cetera, and having the support of the banks in doing this, and potentially then reducing lending to to owners that don't comply with the financial institutions' new set of rules. It's hopefully going to help getting rid of more sort of inefficient tonnage over time. The one thing I would say with these principles is, which I'm missing, is probably a bit more openness from the banks in terms of exactly these incentives that I was talking about. How does it really work, and what is the effect of one bank lending to a very efficient ship? Does that mean he's got room in his portfolio for a less efficient ship, et cetera? And if that's how it works, what is then the incentive for the owners to go and focus and invest capital in more expensive ships? So I think I'd like to see a little bit more openness from the banks on these issues, but I guess that will come naturally as they also get more acquainted themselves with what the Poseidon Principle entails.
Great, and maybe Bob, do you want to kind of chime in here a little bit? We heard some feedback from investors as to what's the likelihood of, you know, half of the bank staying outside of presence, half staying in, and you end up with a two-tiered market. How do you feel like this one might evolve?
Well, the money's good deals. Money will find good deals. If the banks have to walk a fine line because they've lost a lot of their market share to the Far East. Particularly to China and the Chinese leasing companies. So if the banks are too restrictive, they'll lose a chunk of their business that won't come back. And then quote unquote substandard owners or owners who don't have assets that fit into the formula, which as Nils pointed out, we don't know exactly what it is, will end up finding money elsewhere. Or else the older assets will become priced to an all equity valuation, and you just have a two-tiered system. But the assets will stay around as long as the revenues are there. And I think in shipping, when we probably talk later about what we expect to happen. But we all look at COVID and the oil price. We price all this in. I think, but the real money's made on the optionality for the once in a lifetime event, whatever that happens to be, the black swan, whatever you want to call it. The item that wasn't on the selection list, the other 5%, who knows? And that's where the rates go through the roof. And that's why the older assets stay around a lot longer, because they'll take marginal income for a long time because their capital cost is lower. But when the market takes off, that's when they really do well. So those assets won't go away right away.
I think that's right, and that's unfortunately with shipping, it's the surprise factor which keeps these old ships just keep them going until the opportunity arises. That's great stuff. Well, look, let's on to the next topic then, social and crewing. So I think let's start off by acknowledging the enormous contribution that the crews have made over the past year. Two things over the last couple of weeks have been terrific to see. One is the prominent investors penning a letter to the UN requesting seafarers to be designated key workers, establishment of a systematic process. And then yesterday we had the launch of the Neptune Charter, a collaboration of stakeholders across the value chain with identifying several issues preventing crew changes, priority access to vaccines, closer collaboration between operators and charterers, improved air connectivity between maritime hubs. This is really obvious stuff to everybody on this call, and interested to get thoughts and observations. I mean, are governments and regions blind to the role that shipping plays in the global economy? And again, conscious of that awful event that happened in the piracy event over the weekend. But what needs to happen here for people to stand up and listen? And maybe I can start off with Engebret here as well. You guys have crew, and how have you managed it? And what more can the I won't say the industry, because I think the industry are doing a great job, and I know several of us here on this call have signed up to the Neptune Charter and Sea Cargo Charter. But in terms of crewing, what are the governments blind to what's going on, and is it going to be hard to get in here?
I think it's difficult to understand what's happening in the governments because, again, looking lately is that things are getting worse before it gets better. I mean, you're seeing China is increasing quarantine time from 14 to 28 days, Singapore increasing to 20 days, meaning that the ship has to, before they can do crew change, last crew change has to be 20 days ago. And they're closing embassies, making it difficult to get visas. And then the second thing is that customers are putting in restrictions on in the charter parties, saying that there should be no crew change during the charter party and no crew change 14 days before the start of the charter. So I think the governments and the customers have to accept the responsibility and to work with the ship owners to get this moving. I think we in our company have used a lot of effort and money to make sure that we make the crew changes go. It's not easy. At the moment, I think 9 out of 10 planned crew changes are going as planned, and that's up from I think 5 to 6 of 10 back in the second quarter last year. So I think we have managed to find ways to do it, but it costs money, it's expensive, and it's also all the quarantine for the crew members, of course. It's a extra hardship before coming on board. So, but again, hopefully this Neptune Charter will help to get the governments to wake up. But again, remember back in last year we had the IMO coming out with their declaration, and very limited things happened.
I agree with that. Bob, you've signed up the Neptune Charter, same as Ardmore. Great to get your perspectives on this one too. I know crewing and seafaring is near and dear to your heart, so great to get your thoughts on this.
Yeah, thanks, Paul. Like Tony Gurney, I used to go to sea for a living. But of course, the further that is my rearview mirror, and the further we get from the actual cruise, the less you think about it day to day. But it has come to the front of my mind a lot this past year. You know, I think there aren't many industries further from the public's mind than shipping, and the guys on board are even further from everyone's mind. And all it is when a ship comes to a port is a threat. It's a threat of an oil spill. It's a threat of someone coming off diseased. It's a threat of all kinds of things like that. I honestly think the only thing that would change things is Hollywood. You know, with the crowded public space and people screaming for attention. The only time you see a massive change in anything is when people start twittering about it as a massive movie. Tom Hanks has been in like 10 movies where he's a seafarer of some sort. You know, the only thing people know about my industry is Exxon Valdez and the U.S. ship, the captain, I can't remember his name, who made the movie. And that's when it comes home. Otherwise, you know, the space is too crowded. People have other things to do all day than worry about, you know, our seafarers in the middle of the ocean. So that's at one level. At the other level, you know, I know we all do our best. As I said, I used to work on a ship, but even I forget, you know, what it's like to be out there. And these guys are stuck. And we're looking at, you know, moving a ship for a couple of days, and it costs us a lot of money to, you know, get the crews off. But, you know, we've done on many occasions. And even then, you get to a port, you can't find a port, and nobody wants to hear it. So I don't know exactly what the solution is. That's a good non-answer, isn't it?
No, I think it's an honest reflection of where things are at, and it's frustrating when you think about, you know, global trade starts and finishes with seaborne transport, and people just don't seem to realize that. And something as obvious as getting our seafarers, you know, frontline worker status or key worker status to get early vaccines to just expedite all of this.
They don't care. They don't care. It's like oil. They don't want any more oil, but they look around the room. Everything's made of oil. Everything's imported from China. You know, nobody wants to pay the price because they don't know what the price is. They just want to yell about it. That's you know, one of the issues in the world. But you know, like you said, it is a big issue. I don't have an answer, but it seems like you know, a movie comes out, or someone famous starts tweeting about it, or you know, some sort of catastrophe, and suddenly people are aware. It gets on in the papers. It gets not newspapers anymore. It gets online.
Bob, it seems you and a couple of your mates should do a Hollywood film.
You know, you and I, Adrian, will be on. Well, all of us will get on the.
Like a fireman's calendar, guys. Yeah, I'm sure that one will sell. Well, let's turn to the next topic then. You know, closely related, and I'm just reflecting on that. Let's all hope that the Neptune Charter, you know, gets traction, and this whole thing becomes easier. And as we move through 2021, let's hope that all of those folks can enjoy their time at sea and rotations, and not feel like they're held captive. In terms of geopolitical, then, I guess this is a very wide topic, so I'd like us to stay focused where we can. In early 2020, we saw tensions between Saudi and Russia resulting in a massive overproduction of oil, leading to an oil price collapse, which, you know, Bob certainly enjoyed, as did we here at Ardmore. Where it continued talk about trade wars and tariffs exchanging between the US and China, and we've got ongoing developments in the Middle East, and Saudi and Qatar have now recently restored diplomatic ties. So very interested to get perspectives on the impact of tensions in the various markets and containers and dry and tankers. You know, in particular, to kick off, what we might expect from OPEC this year. Maybe Bob, I'll start with you, and I've just finished with you, but I'll start with you, given your large exposure to tankers, and then we can kind of go around the house as to what that might mean. So, how do you think OPEC might respond this year, and what that might mean for us?
Well, all I can say is they've been disciplined, surprisingly so. And when they haven't been, you know, the Saudis have kicked the world back in line, or kicked the market back in line by unilaterally cutting, you know, even more than the rest of the group put together. So, you know, all else being equal, which of course it never is, that should continue until the market's back in balance. The price level of the mid 50s up to $60 seems to be the right number. All indications are the Biden administration is going to really start to choke off the ability for the U.S. to respond. So much of the fracking is done on public lands. So much of the permitting, we all know the permits drive everything. And if it's a closed door, it's going to slow everything down. So it looks like the U.S. production will be coming down over time. And as I said, there's less and less money going to the market in general, the energy markets, and all investors in the oil patch in the U.S. have lost money over the past 7, 8, 9 years. It's been a disaster on all levels, including bonds and debt. So there's less cash going in there, which gives more control to OPEC. So I think what I'm saying, I think they'll continue to heavily influence the market and be able to heavily influence the price. And the U.S. is not going to be in a position to knock them back anytime quickly.
Fair point, Adrian, and lots of data and stats your side, but the impact of the oil price and volatility on the tanker market is phenomenal, and that's what Bob talked about, the black swan event. We can never rule one of those out. What's your kind of observations on kind of oil price and how might OPEC impact on things this year?
Yeah, so I mean, look, we agree. I agree to many degrees with Bob. I mean, the reality is, if we all knew if we knew what OPEC was going to do, we would be on some lovely yacht, probably around New Zealand right now. It's very tricky. The general expectation, Bob is right. 50, 60, just above 60 is the expected oil price over the next couple of years. There's always going to be this balance. OPEC wants to restrict supply. Russia wants to increase supply to kind of harm or restrict the guys and gals over in the US with the fracking and so forth. So there's this balance going on. I think what's interesting, and Bob alluded to it, is now Biden, right? I was just watching after the inauguration, supposedly every call to every major leader, the first thing he talked about was not COVID, was emissions, right? It seems to be, top of his agenda. And actually just before the election, we wrote an article, I think it got published in the Wall Street Journal, which was, what would happen to the shipping markets if Biden won or Trump won? And my very simple summary to that was tankers for Trump, bulkers and containers for Biden, right? It looks like Biden's more laissez-faire angle on international trade will reduce friction, which is good for US exports with bulkers. Soybeans, we're seeing that booming. That's 120% up versus the previous year. It actually started under the Trump administration when in early 2020 when they signed the phase 1 agreement, but it is continuing to grow. And containers, reducing that friction allows more to go between the US and China, particularly from China to the US. Tankers, yeah, it looks like a big driver of the tanker market has been US exports, right? And with US exports likely to decline, and there's other things that are going on there. If Iran becomes unsanctioned again, right? Iran is a lot closer to China, that reduces ton miles, right? That's another big thing. If Venezuela comes on again, that's just going to reduce ton miles coming out of the US and so forth. So there's it's going to leave us to the end, but the world is one big data problem. Shipping is one big data problem, and we try to really understand it at the vessel level to then group up to the trade level to really understand to understand what's happening. Predicting it is very challenging, but if you're seeing trends and so on and so forth, that at least enables us to take an opinion. So we are a bit negative initially on over the next couple of years on kind of global oil production, global oil demand. I suppose Bob did mention it as well. The one positive thing for tanker owners on that kind of through the back door is this cancelling of the pipeline, right? That should be good for ton miles coming out from Canada to the US. So who knows? There's always these funny things that happen in the market that you don't necessarily expect.
Yeah, and I think everything's priced in. So if you look at projections that miners ship today based upon time charter rates or future projections, you end up with a subpar return on equity. That's just the way it is in our industry, I think, in all sectors. So we're all really betting on the odd event that no one projected or predicted, and the markets have very little slack in them anyway, and a small change can drive demand or decrease demand 5%, and then everything changes completely. That's the business we're in, is that one event to drive race to the ceiling for a year or so.
Yeah, and I just to kind of to point out, I think when we talk about tankers, I think sometimes the drivers of kind of crude product and chemical tankers can be slightly different. So, you know, while crude tankers might be struggling now, product tankers are strengthening on the back of, you know, the environmental push to shut refineries is actually creating longer ton miles. So there are a lot of subplots here, which makes the business interesting. I do want to get to the next topic, which are new buildings, but I do also want to round out the political discussion. Engebret and Brett, want to come to both of you. Engebret, in terms of your perspectives on you know, with the kind of OBO combination carrier market, how might, you know, Biden impact and the new administration impact on your business and trade generally?
I think, you know, what's important is to reduce tensions in the relationship with China. I think, you know, the ugly picture we are seeing today with a lot of dry ships waiting outside China because they have Australian coal on board, and China has stopped import of coal from Australia is typically what happens that will negatively impact our business, where these strange regulations coming. So to reduce tensions, concentrate on common interests to solve the big problems, I think it would be good for the industry.
Great. And Nils, you guys spend a lot of time raising finance in Asia as well. How have you found the kind of geopolitical tensions? Has it changed the way people approach it? Has it changed the attractiveness of Asian finance? And is it? Do you think that'll become easier now over the next kind of year or two?
Yeah, I think over the last few years it hasn't been a huge issue, but it was it became quite clear when we were getting closer to the election that there was a focus from financiers in particular in China generally that they wanted to hold on a little bit and wait and see until what happens. And I do expect now with a new administration in the US, which clearly is going to take a less aggressive stance, and you'd hope that these tensions, as Engebret is alluding to, that, you know, that you find solutions and you get to agreements and you can remove some of the various trade barriers that's been imposed. And you know, I do think also the Chinese financiers are going to be more interested in looking towards the West for more transactions going forward. There's even been some financiers being less willing to lend in dollars, etc. And I'm hoping that will be coming back as we go forward and with a little bit more stability now.
Terrific, excellent. Well, look, I want to move on to the last topic, which is new buildings. But before I do that, Adrian, can you just pull up quickly the second survey on oil price, please, and we can then move on to the next topic. So, what does the audience think that the price of a barrel of oil will be at the end of this year? 25 to 50, 50 to 75, or 75 to 100? And while we're waiting for the results, we'll kick off the next topic, which is buildings scrapping. So, you know, I think everybody will agree, and Adrian touched upon the order book data at the start of the presentation. This is a hugely exciting development for all sectors, and uncertainty around propulsion technology is causing hiatus on ordering, and pressure to reduce emissions may result in early scrapping. How do you think this might evolve? I mean, does everybody wait, and then we've got a mad burst of orders in those shipyards? Okay, I think everybody, just quickly the results on that, 77% of people are in on the $50 to $75 a barrel. So stability this year. Let's see if that works out. You know, back to new buildings then. Does everybody wait and see, and then we've got a mad burst of orders, or will we see more aggressive speculation on technology? And kind of related to that, then, you know, people seem to care about emissions, and I know, Bob, you and I have actually talked about this before. Care about emissions. How much do people care about emissions in shipbuilding versus emissions in actually the operation of ships? Because there's a whole carbon intensity around the whole process. It's not just running it. You know, an ongoing debate in electric vehicles about battery production, but it's not hindering the growth of electric vehicles. So does that really matter? Will people ever catch on to it? So maybe let me start off with Engebret. We are kind of coming up to time, so great to get as many thoughts as we can. On the first point, Engebret, then, does everybody wait, or in terms of clarity on propulsion technology, or are we going to see people, you know, take speculative positions different paths?
I think when we see from the figures for Adrian, you will see that people are actually holding back investments. But what I think people will invest gradually by trying to create optionality when it comes to fuels, by building in a space for tanks for whether it's ammonia or similar things. So I think that's because there's so much uncertainty. What is the future fuel? When will the infrastructure for fuels in the ports and the production of fuels be ready? So I think, as business people, we need just to build in optionality. I think that's the key. Otherwise, you can really go wrong.
Yeah. Nils, any thoughts? You've obviously spent a lot of time again in Asia, but what are your perspectives on the financing market and how willing would banks be to kind of lead in with I won't say speculative orders, but orders in the absence of clarity on technology and the IMO rules?
Well, I mean, first and foremost, I agree with Engebret. Obviously, there's a lot of issues now in terms of choosing the right fuel and what to go for and not. And it's coming a little bit back to the initial point we discussed at the beginning of the session, more related to the environment. But I think ultimately, it's a bit of a side point. But ultimately, I think we as industry participants, we really need to work together. And I think it's important that we do find a common agreement on what are we going to do going forward. I mean, you see people ordering left, right, and center now. I mean, it doesn't mean that the order book is going through the roof, but people are selecting different types of propulsion systems without really knowing where they're going. I mean, it's very brave by all means, but it might turn out to be stupid, at least for 50%, great for the other 50%, but equally so. I think it's important that we get together with the charters, we get together with the banks, we get together with everyone in the industry and find a common ground here and move forward on that basis. It will take some time, but we have the ability to do it. And I think I know there's been some criticism of IMO earlier, but we're probably one of the few industries that has a sort of regulator for the whole industry globally. So why are we not using that more to actually try to come together and find one path? Having said that, on the question, I do think ultimately if we do find a route going forward, I suspect there will be a little bit of a stampede at the yards in China. Typically, that's why ship owners work. They know what they want to do, and then they go out and order ship because they think it's a great opportunity on the basis of a low order book. So yeah, the people will probably be rushing to the yards at some point. Hopefully, it'll take a little bit of a while before, I think not too long, but maybe another year or so until we have a consensus on where to go, and that'll keep the order book at a very still reduced level. Finance-wise, I think the biggest challenges for the banks will be how, in particular, when you're going into new propulsion systems, etc., how this is going to work in the banks, both economic models and risk models. That I think will be very interesting to follow, because banks traditionally are not, as much as they want to be green and they want to support evolvement, they're not extremely keen on being the first ones to take the step and support something that is completely new. It's not really a risk that the banks like. So I'm a little bit concerned about that, but I think with the help, coming back to my point, work together with charters, get some long-term charters, de-risk the project, etc., and then hopefully you will get the banks to come aboard also with a new technology.
Perfect. And I'm going to have a last question, but before I come to that, I'm going to ask Bob for comments on that. But the last question will be, everybody will do a quick round the house to identify who will be the winners and losers for the next 10 years. But while you guys are thinking about that, Bob, what's your perspective on kind of new buildings? And, as we pointed out, the carbon intensity in building a new ship is enormous. But are people really attuned to that? And is it just, the preference for cleaner tonnage in operating them is going to dominate? So just get your perspective on that.
Yeah, they're not attuned to it. And, first of all, I'm not a ship owner. I represent money that owns the ships. And I think it's the same for a lot of people who have my job. So I have to follow the money. And from a financial point of view, it's not a good bet, as Nils said, to buy a ship right now when you don't know what's going to be the propulsion over the next 22 years. A hybrid, in my personal experience, hybrids never seem to work. I mean, my fax scanner never seemed to work. My CD cassette player never seemed to work. They just cost more, and in a couple of years they're obsolete. So the real good bet, I think, is to look down the age curve and see, I'll buy a 3, 5, 10-year-old ship and run it out for as long as possible. Just looking at the numbers. And as I said, the pressure not to invest in carbon is huge. So I guess what will happen is there will be a squeeze at some point in the market, and as Nils said, there'll be a huge rush to the yard because rates will be $1 million a day, and people will just buy. But I think that's a bit away. And I'll keep it short. I know we are short on time, and I've taken up short into it.
Great. Well, I mean, the good news is for the order book is that nobody's made a lot of money for the last couple of years. So I think we have to see to make money before people will get any more money to make orders. So I think that hiatus of a couple of years is potentially the lucrative opportunity for all of us. So we'll wrap it up in a moment then. So maybe I'll start off with Engebret. Quick, who do you think will be the winners and losers over the next 10 years, aside from Klaveness competition carriers?
I think, it's I'm going to put the money into that. The winners would be the ones that can provide the most cost-efficient way of decarbonizing shipping. Of course, again, it's no problem to invest in extremely expensive ships that with some fancy technology. It has to be cost-efficient. That's what the customers will look for.
Perfect. Nils, what's your observations on the winners and losers? We'll keep it to winners. Let's keep it shorter.
Yeah. I mean, I agree with Engebret, absolutely. I also think size, in particular for ship owners going forward, will be extremely important. I think those who can, comply with environmental regulation, and those that can get together and create sizable companies, I think that's the ones that will be the winners in the future.
Perfect. Bob?
I think we'll have a lot of volatility in the next couple of years because of everything we've talked about, plus whatever we haven't talked about. So I think the ones with operational leverage and not financial leverage will in the end win the day.
Perfect. And finally, Adrian.
Cool, thanks, Paul. I'll be quick. I'm gonna, a bit of a cliche here. Data is the oil of the 21st century. So I would argue data companies and companies that use owners that use data to get a competitive advantage are going to be the.
And who should we use? So where are we going to find that data? Any ideas?
Right.
Go ahead.
Then the other quote, it's not mine, it's Michael Parker, is emissions are going to be the currency of the next 10 years. So, green focused owners. I wanted to comment more on the Poseidon principles, but we run out of time, but I think it will encourage building of more eco ships. And then my one crazy one is all our cars, it's going to happen in the UK by 2030, are changing to electric. They're going to have to be moved around the world, right? What are they going to move by car carriers? They're probably not going to want to have fossil fuel burning car carriers. So it's probably an opportunity in some kind of weirdly propelled car carriers carrying electric cars around the world. That's it.
I'm going to give my vote with Engebret as well. I think the ones who can very cost efficiently reduce carbon will be the winners over the next 10 years. We have one last survey. Andrew, if you don't mind, just bringing up on that topic on new buildings. What would be the dominant fuel for main propulsion in deep sea shipping in 2030? Will it be gas, LNG, LPG, ammonia, biofuels, hydrogen, or methanol?
I don't see sails there.
I guess hydrogen and sails are probably the same thing.
And I don't see carbon. I don't see bunkers.
Andrew, let's see the result.
We could have made that very long, Bob.
Yeah.
Hydrogen. Well, there's going to be a lot of money made and lost based on that survey. So let's hope for a lot of the former.
Okay, so let me just ask. There's just one. We're out of time actually, but there's a quick question which has occurred to me, and it's come on in one or two of the questions from the audience. I mean, it's this whole thing about the black swan. I mean, it kind of appears from the discussion that you know, although we all take into consideration the macro issues, it's not the macro issues which determine our investment decisions. It's basically we just have to be there. We have to be there when the market is extremely strong, and in order to be there, you have to make various decisions along the way in order to be there. Bob, would you go along with that kind of scenario to some extent?
Yeah, as I said earlier, and I really believe this, the long-term return on shipping is subpar. So we're all willing to suffer that penalty in the belief that we'll be there for the optionality to the upside. You know, what we're really buying when we buy a ship is an option on the freight market, you know, over the next so many years. And that freight market has a lot of volatility. So we're buying into the volatility. And what we do is structure our balance sheets or a charter strategy to make sure that we're there to have the exposure when that happens. And if you look at the cycles, they're always driven by something we didn't expect at all that no one's talked about on a panel. Like I said last year, I said, what are we going to discuss after scrubbers are gone? Well, we didn't have to. That mystery didn't last very long.
Yep. So, and I guess for Paul and for Engebret, you're a public company. So I guess your investment decision process is a little bit different than that. You can't just sort of buy and sell sort of opportunistically. It's more about, you know, sort of long-term growth or whatever it may be. Is that right, Paul and Engebret?
I think that's fair. I'd love Engebret to comment as well. I think that's right. You know, when you're a public company, you're under the public microscope, and you know, you don't probably have the same complete flexibility to kind of buy and sell and trade, and particularly down the kind of older tonnage space. So you're a slightly different operation. You know, we're all trying to do the same thing. We're trying to buy assets at the right point in the cycle and run them well and be there for optionality, whether you're a private company or a public company. So we think about things in the same way. But as a public company, you've got public investors, and there are obviously, you know, mandates in their funds and where they can invest now. So we need to, as an industry, need to stay relevant and need to kind of understand what people are looking to do, and we have to be attuned to that as a public company. Engebret,
Paul, you're providing a vehicle for outside investors to get in and out of quickly when they want to play that optionality.
Yeah. Engebret, last word from you, perhaps.
Yeah. Now we are basically building our ships for the whole lifetime of the ships, specialized assets. So that means we have to select the timing correctly, and otherwise you are there with a expensive asset for the whole life. And yeah, as a public company, we have to see what the investors like. But again, it's good to have a big shareholder like Klaveness being the main shareholder. That of course has a decisive factor into what we're going to do.
Yep, perfect. Okay, we're out of time. So Paul, Nils, Engebret, Bob, and Adrian, thank you very much for a great discussion. Thank you to all of our listeners for listening in. We're now having a break for 1 hour. We'll be back on board at 2 p.m. London time, where we're going to hear about ESG impacts, all shipping stakeholders. Looking forward to seeing you then. Thank you very much.
Thank you, everybody.
Thank you.
Bye-bye.